All right, hey traders, TG Watkins here. It is September 28th, Wednesday, when I'm recording this. Hopefully everybody's doing well out there, and yeah, we got some news to talk about, so let's get into it. If you guys are interested or new to the channel, anything else like that, you can come over here to profitpilot.com or simplytrading.com, and you can find out more information about me and us and any of our other traders. All right, so if we come over here, let me pull up the S&P. So some of the news that has come out is that the Bank of Europe, so UK over there, they're doing quantitative easing. So QE, they're trying to buy bonds. And it's like, oh, okay, well, so they are trying to do things to ease stuff over there. They are trying to do situations with taxes. They're trying to take off some payroll taxes from what I've heard. And then, of course, we've got the issue with oil prices and energy costs and all that stuff. And so they're trying to put money into there and take care of that. So we've got something all over the place. And it looks like we are not up and running on the Moxie room. So let me get that real quick. And anybody over in the Facebook or YouTube space, if you guys want to let me know that it is working over there, that would be awesome. So let me see if I can get this one up and running for a second. All right. All right, so we should be up and running in the Moxie room too, so hopefully that'll work now. And then, yeah, Facebook, YouTube, hopefully things are running up over there if you guys can hear me all right. So basically what we've been seeing is we're getting some bond buying over in the Europe, and so they're trying to soften everything over there, which, well, we'll have to see how much of an influence that actually has. So Mirza, can you also kind of check the, I don't know, Facebook, YouTube, see if that thing's working? Seems like it is, but I just want to make sure. So we've got that. We also know the market is down at the June lows, which is a potential area for price to bounce. And we've been looking for that, or at least I've been looking for that. You can see here, price is perfectly down here. We have been seeing some divergence like this, but I can show you some examples of where, we see this divergence, but it doesn't actually go anywhere. Chris, thanks. Appreciate you letting me know that that's working over there in Facebook. So the thing that I've been looking at is that price is stretched to the downside. It is oversold. And you can see that by price being outside of the 30 ATR and then this gap between price and the 8 EMA. Now, I will show you a couple examples of how it does not necessarily need to go up in order to fix that. It can go sideways to fix that. And that is that's the question that we're at. Because right now, we have not been getting much traction to the upside. And we know that there's a bunch of kindling out there as far as the put-call ratio is super high. Everybody's loaded on one side of the boat, and that can be a problem. That can be a reason for price to short squeeze up, kind of like this. But the other side of things is that so much messaging has been given to us as traders and anybody else in kind of the financial industry that they've been saying, look, we are not backstopping the market. The Fed has said, we're not backstopping the market. We are going to be raising interest rates. We're going to be doing it more than you thought. We're serious about this. We're going to be holding them at higher elevations, and we still have quantitative tightening. We can still, reduce our balance sheet more than just interest rates. And so they're like, look, we really got to take care of this. And we really do have high interest, and this is going to be a problem. And so it seems as though a lot of people are finally, catching this and getting serious about it and saying, okay, well, we just have to step aside because there's no sense buying. Yes, there might be a short squeeze. Yes, there might be something happening, but also who's buying? Who's starting to put some money in here? Other than day traders taking these little opportunities down on lower time frames, finding these little bounces, we're trying to figure out, like, is there going to be anything more substantial? Now, for me, as far as the Moxie indicator and how I trade and look at stuff, what I've been looking at is the last downtrend that we've had, if I can get this moved over enough. And what I want to show you is that right here, you can see that anytime price got a little oversold, it did bounce, but it bounced up to the hourly 50. Got a little oversold. Okay, this one was the FOMC back in the day, and it went over the 50, but notice the Moxie indicator was below zero. You can see same thing here, got a little oversold. Yes, it went over the 50, but again, the Moxie indicator was below zero. We're in that same situation. So yes, price got oversold, and there is a distance between price and the 50. So right now we're trying to figure out, is price going to flag exactly into the 50, or could there be a little bit bigger of a move over the 50 but yet it's still going to be an inverse trampoline move. So price over a downtrending 50 with the Moxie indicator below 0 is an inverse trampoline move. So, I'm looking at that, looking at the daily chart, figuring, okay, well, what kind of a bounce or sideways move is price going to need in order to just, resolve this oversold condition before going lower? And I think that's where we're at. The other thing that kind of blends with this is that we're looking at this and saying it's a double bottom, right? Because we can come over here to, let me show you the, monthly and weekly, and you can see, it's a double bottom. We're right here. You can even say we're at the weekly 200. We're right there. We're saying, well, what's going to happen? Is this going to hold? Is this double bottom going to hold? That's what everybody's looking for. And the idea behind a double bottom is that everybody here is looking left because that is where price held, at least the first time, held once. And so price is thinking, traders are in here. They're like, well, it was support once. Is it going to be support again? Because if the double bottom holds, then theoretically we should be going higher because that low held. Now, it doesn't have to, it can hold for right now and then kind of move up a little bit and fail later, but that would all be part of the trying to hammer out that bottom and figure out if it's going to work or not. So this is where I always say that a double bottom works when it works. Otherwise, it's a resting place until price goes lower. And it's a resting place because everyone here is battling while they look left. And who wins the battle? Either the bulls win the battle and the double bottom holds, or the bears win the battle and it eventually goes lower over the course of time. So I do think we're going to go lower. The question is when and how. And I think that's kind of where we're trying to settle out and figure out, okay, exactly when is this thing going to do something? For now, if I'm looking at the 15-minute time frame, as I always say, I'm looking at price to engage with moving averages. So yesterday we did get a bounce over the 15-minute 50, but it did not hold the 15-minute 50. Today we have a move over the 15-minute 50 again, but we don't know yet if price is going to hold the 15-minute 50, and that's the key. So that if price is going to go up for a while, or in any meaningful way, it needs to hold the moving average in order to move up. If it can't hold it, then it's nothing that we can really rely on and work with. We still have the 8 below the 21 on the hourly chart, so that's still got to have some work to do if it's going to cross and actually move up. But again, we're still dealing with a downtrending hourly 50. So those are kind of all the things that I see with the SPY. And then if we look at the UVXY is fairly high, all that kind of stuff. And interestingly, if we look at this, let me zoom out just a little bit. You can see with the UVXY, this trend line, look at that, it's right at the trend line again. So I could see a little bit of a reprieve, and I'm looking to see if price is going to kind of fade through here because this is a little elevated. You can see there's a gap here between price and the hourly 50, so it's a little elevated. And so I could see price kind of maybe coming down like this, and then we'll have to see if it actually goes up again. So if the UVXY is going to fade for a little bit, then that would mean that the market, the S&P, is probably going to either bounce or move up for a little bit. And the UVXY is a very, very tricky vehicle. So it's just going to be weird. It's not the easiest thing to trade. But what I'm wondering is, if the S&P kind of starts to hold, and doesn't really roll over, then the UVXY is going to probably fade. It could fade much harder than what the market actually moves up. Like the market might just go sideways, but you could see the UVXY actually fail or fade in a more significant way. And so what I'd be looking for is see if it's going to come down like this and then start to move up in a similar fashion to here, like how price moved up like that, pulled back into an uptrending hourly 50, and then we had a big move. So on the daily chart, if we had a price pull back into something around the 21 or the daily 50, something like that, to see if price kind of came down and found some support at an uptrending daily 50 at this point. So that's what I'm kind of curious about. So we have that. And then a couple other things. One thing I posted on, on social medias today, Twitter and stuff like that, was the oil situation, because regardless of what we're seeing in Russia and Ukraine and natural gas and the Nord Stream pipeline and all that kind of stuff that's coming out there, what we can see is that there is something going on, or there was, in the XLE, XOP, USO. And what I want to show you is with the Moxie indicator. What you'll notice here is price was over the daily 50, but notice that the Moxie indicator could not get over 0. That is what I call an inverse trampoline move. And basically an inverse trampoline move is a false long, or it's a shorting opportunity. It just kind of depends on what particular setup we're looking at. And right here, you can see the same situation occur on the hourly chart. So if we look at this, this is right here on the hourly chart. And you can see that the last little move up, and maybe this is where I think that the Moxie indicator really shines, especially for, in a way, keeping you safe as a trader, because you might be looking at this and say, oh, hey, nice, that just pulled back into, say, the daily 50. We are now back up. It's following the daily 8 and the daily 21, and that looks great. We should go buy it. But if you looked at the hourly chart, this is what kept me out of it, and this is what I was telling the Moxie subscribers. I was like, hey, look at this. That is an inverse trampoline move. And I said, at least for the long side, I don't see an opportunity yet. If this was going to work out for the long side, I'm going to have to see more information. I'm going to have to see price actually hold the hourly 50. I'm going to have to see the Moxie indicator cross over 0. And you can see that other than one bounce at the hourly 50, it did not hold the hourly 50, and right there, because of the inverse trampoline move on the Moxie indicator, and that demonstrated that price wanted to keep going lower. So if you have the Moxie indicator, you start seeing something like this, that's going to be pretty important for you to be aware of. So then you just take that and you look at USO, and you kind of think like, well, look at what USO is doing. If USO is doing this, do we really think that XLE, XOP, generally oil stocks are going to go up? No, they're not going to go up. And this has been a fairly big tell. And in fact, that spot on the XLE where I was showing that price was, moving up over the daily 50 was right about here, and right about there on USO. That was a little blip to the upside. But if you look at the daily chart and the Moxie indicator, clearly the daily 50 was in a downtrend. So that's one thing to kind of note, because you had price trying to push up across a downtrending daily 50. In addition to that, you could see that the Moxie indicator was below 0. So that meant that pretty much any move over the daily 50 at some point was going to get rejected, because the Moxie indicator was so far below 0, it just wasn't going to support it. Like, price should not be over the 50 if the Moxie indicator is below 0. You can see that situation here too. Here's price over the 50, Moxie indicator below 0, and you can see it then failed the hourly 50, then it got rejected by the hourly 50, and it continued to push to the downside. So that's a lot of what I see there on USO, even UNG, and there's been some talk or questions about, well, is this Nord Stream pipeline, break, sabotage, explosion, whatever you want to call it. We don't know enough information yet, but whatever the situation is, there's been some talk about like, oh, well, is this going to be good for, American natural gas? Because, if they're having troubles over there, they're going to need more from us and all that kind of stuff. Well, I just don't see it in the charts yet. It does not look like UNG has responded to that news. And while it is current news, there's not much that's really seeming to happen right now. And for right now, that was an inverse trampoline move, another one. So price should not be over the 50 if the Moxie indicator is below 0. And it's been getting just rejected and guided down by the hourly 50. Now, maybe it's getting to a point where it's a little bit stretched to the downside, just like what I said with the S&P and market. But it doesn't have to bounce. It can go sideways, and it doesn't have to go up necessarily in order to fix this. It just has to kind of fix itself with time as opposed to price. So that's something we're seeing. And a couple things I wanted to show you as examples of that. Now, Microsoft. Now, I will say, Microsoft sure seems like Microsoft and Google looking very, very similar. They sure look like they're getting pretty darn oversold. And I will definitely call attention to that. But I don't know if there's going to be like a real legitimate move to actually trade to the upside. Yes, we're seeing some positive divergence. Sure, absolutely. But remember, those of you who have the Moxie indicator, or if you have the Moxie indicator rules and you're learning how to read this and stuff, there's a 2-part rule in order to trade the Moxie indicator. You need the Moxie indicator over 0, meaning positive if you're going to go long, and you need price to be over the 50 SMA. Those are the 2 situations that need to exist in order for you to take a potential, real move to the upside. And right now, we have neither of those, so it's not quite ready yet. And then the other thing is that even if price gets over the 50, we need to then see it actually confirm by following the 50. Let me show you an example of that. XPEV. We were talking about this yesterday in the Moxie room, so I thought this was a pretty good example. This is why I have that two-part rule. Now you'll notice here and here, the Moxie indicator has been over 0, so it's been positive. You're like, okay, maybe you would have gotten chased out of your shorts because you're like, ooh, Moxie indicator going positive. Like, that's pretty dangerous for me as a short. Yes, that might be true. But then as far as trying to take a long trade, there has been no setup for a long trade. You can see that the one time right here, the price actually just barely managed to get over the hourly 50, could not hold it. And that meant it did not verify, could not validate that it was ready to hold a moving average and actually move to the upside. So that wasn't doing anything. And then you could even see here, this did a little bit bigger of a pop, but same deal. When it came back down to the 50, it could not hold the 50. And that's just a fact that you got to look at and say, this is not working. Even here, got over the 50, could not hold it. So I take these examples and these things to show you and demonstrate that if we look at the S&P, yes, the S&P might be oversold, oversold, all those kind of things. But all it has to do is basically get back to the hourly 50. And if it does that and still gets rejected by it, we're going to still be in a downtrend, and we can just kind of keep bouncing back and forth between these, inner and outer parameters on the daily chart. So that's just kind of something I wanted to bring to your attention. So if we do go back to the SPY and we look at this, we'll say, yeah, look at this. Price got oversold. What did it do? Back to the 50. Price got oversold. Initially back to the 50. Then we did get a short squeeze, but it was a false long. Why? Because again, this was an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below 0. Then we can see again, oversold, back to the 50. And now we're here again, oversold. What are we doing? Probably trying to close that distance between price and the daily or the hourly 50. But that doesn't mean we're in a long trend. It doesn't mean that something has reversed. If anything, it means we're either doing a bear flag or we're doing a bounce in a downtrend. So while that bounce might be somewhat substantial like we saw back here, we don't have it confirmed. Even if price got over the downtrending hourly 50, we gotta wait for price to actually confirm support. And that's what didn't happen on this last move to the upside. And that's why we need to be careful and just almost kind of help tell ourselves like, okay, if this thing bounces or if it goes up, it's probably just going to be a bounce and a downtrend until we can see otherwise. So I know, as I said earlier, I know that there's a lot of people on the bearish side, and that's very true. There's a lot of kindling for a short squeeze. All that stuff is there, but it takes buyers to step in. And just because everyone's loaded to the short side, if we don't get people or buyers to step in, then it's just not going to do much, and it kind of keep melting down. Austin in the Moxie room yesterday had a couple of good tickers to look at some interesting stuff. So showed you guys XPEV. Here was another one that I thought gave a fairly good example of, hey, now maybe the indexes won't do this. Maybe this is kind of an excessive move, but just to show you how when people want out of the market or when something starts to free fall and break to the downside, it can go. It can go for a while. And same thing here. Look, you can see how it had a couple bounces to try and get price closer to the hourly 50, but each time the hourly 50 was resistance, and this thing just kept moving down. You can see it's still underneath a downtrending hourly 50. And that's why I'm saying we are still in that condition with the S&P, and so until I see otherwise, until we can really see something that's going to scare us out of our shorts or whatever, we got to really kind of stick to this and say, well, these are just bounces in a downtrend for now. And oversold can definitely get more oversold. In fact, another thing I like to bring up is this is 2008. So 2008, you can kind of see here, we might be in this situation. And this is a daily time frame. So what I was saying is right here, you guys see how there was a gap between price and the 8 EMA off of that 30 ATR? Yeah, that's technically oversold. But look what it did to fix its oversold condition. It just brought itself back to the 8 EMA, and it just carried on down there. There is a potential that we could be in that situation. And so until it's ready, until it's actually ready to start moving higher, we're still going lower. And the other thing that could be happening is we could get some crazy bounces. Like look at this, got oversold and look what it did. It came all the way back down up to the daily 50. Sure, there could be some crazy moves, but you also notice that as soon as it did that, it got sold back into again. and then continue this bounce, down, bounce, down, bounce, and just kind of oscillated its way back down there. So we're gonna have to see if there's anything constructive to actually work with and do. But for right now, everything's looking pretty rough to the downside. I know it's a lot, but it's still going that direction. Some of the other things that I'm looking at. So F, we were on this one. I wish I had actually taken a bigger position on it and then held through it. We took a little one right here, which is nice because that was a quick 5% and then it bounced. But look what the bounce did. So what did it do? First of all, here's the Moxie price trigger. See how that already told us that the energy and momentum is now negative. And so what did it do then? Even bounces right here, where they bounced up into the underside of a downtrending hourly 50 with the Moxie indicator below 0. Those were inverse trampoline moves. Price should not be over the 50 if the Moxie indicator is below 0. And you could see the same thing here. A little bit bigger of a move, maybe a little bit of trend for a couple days, but it still got over the 50. Moxie indicator below 0, could not hold the 50. You can see right there, broke the 50, and then continued to get rejected by the underside of the hourly 50 until finally it broke the daily 50 and there was news, and then that carried forward all the way down further. So kind of looking to see if there's something like that might be happening with the S&P. Kind of like little bit, and then finally something big happens. So as long as price continues to be weak, continues just kind of bump around these lows, just kind of not gain any traction, just be careful. Watch these things. They're probably going to be just bounces in a downtrend. So trying to just get a little bit closer to the downtrending moving averages before something else more major happens. I mean, heck, if we look at Apple, and Apple had news come out, they said they're going to be, I think, lowering their production targets. They're going to not be producing as many iPhones. And so bad news, and price went down. And you can see here, there was a level here. Looked like there was going to be a level, like that double bottom that we're looking at right now with the S&P. And what did it do? It broke it. So, but how to break it? Look right here. Price got rejected by the underside of the downtrending hourly 50 with the Moxie indicator below 0. And I got to say, I was looking at this. I was looking at a lot of positive divergence in here. Moxie indicator up, positive. Moxie indicator up, price down, positive divergence, but nothing triggered. Even here, price got over the 50, but the Moxie indicator was below 0. And then here and here, price continued to get rejected by the hourly 50. So if we kind of take this, take that idea, and we apply it to the S&P, until we really see something different, we need to be kind of careful that this could just be a little bit of a bear flag into the hourly 50 before price goes lower. So pick your spots, see what we can do, find some bounces to short into, and we'll just have to see where all this kind of turns out. But I just don't see anything quite yet that says we need to be careful on the short side. And that just probably means that the shorts are correct. And until they're proven otherwise, I think this thing's going to just kind of chop around a little bit until it finally rolls lower. The question is when and what path is it going to take from now till then? All right, guys. Well, that's my time. So just remember, if you have any questions or don't know anything about me, come over here to profitpilot.com. Also simplertrading.com. You come over to services and all that kind of stuff. And we'll see you next week. Hope you guys are doing well.